Howdy, everybody. Welcome to Liberty Call. Today is Friday, January 26, 2024. Hope everybody's having a fantastical day out there in the interwebs. It is snowy here in Colorado. We were only supposed to get like a trace, a dusting. Got a couple of inches. So it's just kind of the way it is out here in the mountains. So, but like I said, hope you're having a good day out there. It is Friday and the weekend is upon us. So if it is your first time watching Liberty Call, if you could do me a favor, if you could give me some thumbs up, like, share, subscribe, follows, and press the notification bell. Alrighty, well, let's go ahead and get into today's numbers and see how things turned out. Looks like the market lost a lot of steam as the day went along. The Dow Jones only finished up by 0.16%, 60 points, closed at 38,109. The S&P 500 was down 0.09%, closed at 48,89. NASDAQ down 0.36, closed at 15,455. The VIX was down 1.12% today. It's currently at 1330. Canada up 0.11, Brazil up 0.6, and Mexico up 1.41%. Over in Europe, Germany was up 0.32%, the UK up 1.4%, France up 2.28%. In the Netherlands, they were up 0.35%, Spain up 0.2%, Italy up 0.73%, Switzerland up 1.62%, and Portugal down 0.3%. In Russia, it looks like they were split today. The MOEX up 0.17, the RTSI down 0.84. And the overnight, starting out with Japan, the Nikkei was down 1.36%. Looks like Australia was closed. New Zealand down 0.08. In China, the Shanghai was down the Shanghai was up 0.14. The Shenzhen component was down 1.06%. The China A50 down 0.08. DJ Shanghai down 0.15. Hang Seng down 1.6%. And the Taiwan weighted was closed today. All right, so kind of a meh day in the markets. I know here domestically things lost a lot of steam in the later trading day. What was that about? About 12:45-ish Eastern time is where the market really dropped. So, all right, let's go ahead and take a look and see how the markets did for the week. Starting out with the Dow Jones. It's going to finish the week up about 0.49%. The S&P 500 is going to finish off the week about 0.73%. NASDAQ is going to finish up about 0.42%, so pretty muted all across the board. The Dow Transports finishes the week up 1.63%, and the Dow Utilities looks like it's going to finish down by about 1/3%. So, but all in all, not too terrible. Especially with what's going on. We still have an inverted yield curve, and things are just kind of So, all righty, let's go ahead and get to the economic data that came out this week. Starting out with jobless claims, came in at 214,000. Forecast was 200,000. Last week's number was 189,000. Continuing claims came in at 1.833 million. Forecast was 1.828, so 5,000 over forecast. And last week's number was 1.806 million. The U.S. S&P Global Composite Purchasing Managers Index came in at a 52.3. Last month was a 50.9. Anything above 50 on this index shows growth. Anything below 50 is a contraction. So we're right about that midpoint where we've been basically going back to, what was that, September of last year. Let's see, GDP came in at a roaring 3.3%. Everyone was forecasting around 2%. Last quarter's number for Q3 was 4.9. We'll see what the numbers turn out over the next couple of months, because you can see for Q3 started out at 4.9, was raised up to 5.2, and then back to 4.9 for a final number. So over the next 2 months, we'll get some more clarity on the GDP. U.S. durable goods orders month over month were flat. The forecast was 1.1%, and last month's number was a 5.5. Building permits came in at 1.493 million. Forecast was 1.495 million, so just a smidge below forecast. Last month's number was 1.467 million. Building permits month over month grew by 1.8%, and last month they actually were contracting. Personal income month over month grew by 0.3%, right on forecast. Last month's number grew by 0.4%. And for spending, it actually grew by 0.7%. The forecast was 0.4%. Last month's number was a 0.4%. So income increased by 0.3%, but spending increased by 0.7%. So that's a net loss of 0.4%. All right. That is everything for the economic data. Let's go ahead and move over to the market recap. S&P 500 struggles for direction as inflation cools, but Intel's slump blunts tech. All right. The S&P 500 experienced a relatively flat performance, fluctuating between gains and losses as investors assess the impact of weak guidance from tech giant Intel and signs of easing inflation. Intel's disappointing first quarter guidance led to a 12% decline in its shares, exerting pressure on the technology sector. Despite the negative guidance, there were some optimistic notes, as the weakness was not attributed to Intel's core PC and data center business, and the company expressed confidence in returning to growth later in 2024. Chip stocks faced additional headwinds from Western Digital, which reported better than expected quarterly results, but saw its shares decline over 3%. The overall performance of the technology sector was influenced by these developments. On the economic front, the core personal consumption expenditures price index, a key inflation gauge favored by the Federal Reserve, slowed to 2.9% pace in December, down from 3.2% the previous month and below economists' estimates. This sign of decelerating inflation could be well received by the Fed as it prepares for its upcoming policy meeting at the end of January. In terms of corporate earnings, T-Mobile US experienced a marginal decline after missing its profit target for the fourth quarter. However, the company maintained optimism by forecasting growth in a monthly bill-paying phone subscribers for the year. American Express, on the other hand, saw a 7% increase in its stock after beating full-year profit expectations, despite raising loan loss provisions to brace for potential defaults. Visa, the largest payment processor globally, faced a 1.4% decline in its stock as it offered a tepid second quarter sales guidance, indicating a potential slowdown in net revenue growth compared to the previous year. All right, so that was everything going on in the markets today. Got a little more detail on the personal income and consumptions data. I'm going to go ahead and just read this verbatim from First Trust and see what they had to say. Today's report on the consumer shows no signs of recession and more improvement in inflation. Personal income rose by 0.3% in December. Private wages and salaries were up 0.3% in December and up 6.5% in the past year. Meanwhile, government pay was up 0.7% in December and is up 8.2% in the past year, the most for any year in the past 3 decades. We don't think growth in government pay is sustainable or good for the for the overall U.S. economy. Consumer spending rose 0.7% in December, with both goods and services showing gains. Outlays on goods rose 0.9% in December, the largest single month gain since last January, as consumers picked up spending on autos and prescription drugs. Goods spending is up 5% in the past year, and with goods inflation flat, spending is up 5% in the past year when adjusted for inflation. Spending on services rose 0.6% in December, led by financial services and insurance, and is up 6.3% in the past year, 2.3% when adjusted for inflation. On the inflation front, PCE prices, the Federal Reserve's preferred measure of inflation, were up 0.2% in December, bringing the 12-month comparison to 2.6% versus 5.4% in the 12 months ending December of 22. Core prices, which exclude the ever-volatile food and energy categories, also rose 0.2% in December and are up 2.9% versus a year ago. That's down from 4.9% in the year ending December of 2022. Note that the Fed has prioritized a subset of inflation dubbed the supercore, which is services only, no goods, excluding food, energy, and housing. The measure rose 0.3% in December and is up 3.3% versus a year ago. And that's an improvement versus the 4.8% increase in the year ending in December of 22, but not as much improvement than the overall figure or core. In addition, all these measures remain above the Fed's 2% target, and given shipping disruptions in the Red Sea are delaying deliveries and pushing up shipping costs, we would not be surprised to see volatility in the inflation numbers in the months ahead. It's too early to call victory, but the data are trending in the right direction. All right, so that is all the news on income and consumption. One last article here, more just food for thought with all the shenanigans going on down in Texas. I figured some folks would be interested in this. This comes from Zero Hedge. This was authored by Tom Luongo of the Gold, Goats, and Guns podcast and blog. I love Tom. He is. I listen to his podcast every week. He is a very bright guy. Let's go ahead and see what he had to say and go from there. All right. The author, Tom Luongo, discusses the emergence of the concept of soft recession in the United States and Canada. Luongo has predicted this trend in his 2024 predictions, citing examples like Alberta Premier Danielle Smith's refusal to collect carbon taxes for the federal government. Recently, Smith announced plans for Alberta to double oil and gas production, further defying Ottawa. Luongo emphasizes that such moves don't require a majority of leaders, but can be sparked by individuals taking a stand, much like the Yellow Vest movement in France. The author notes that the situation is escalating in Texas, where Governor Greg Abbott has declared the Biden administration in violation of the Constitution for impeding Texas from securing its own border. Abbott's letter to the Biden administration is seen as a significant escalation, and 25 other states have expressed support for for Texas. Luongo sees this as a move towards soft secession, with states pushing back against the federal overreach. The ultimate goal, according to Luongo, is to undermine the validity of the U.S. debt markets and Washington, D.C.'s ability to pay its bills, aligning with the interests of global elites. Luongo acknowledges that the situation feels somewhat manufactured, but emphasizes its importance in awakening people to the threats they face. He sees this as a moment for individuals to decide what kind of country they want to live in and whether they prefer rule of law or rule of force. The author raises the question of whether the Biden administration might declare Texas in a state of insurrection to deny it a vote in the upcoming elections if it refuses to turn Democratic. He concludes by highlighting the significance of federalism returning to public discourse. All right. So, I think people are getting an education on how the Constitution works and that the federal government is not superior to the states. The federal government only has the duties that are given to it by the states, and everything outside of that, it is not allowed to do, which I think people are finally figuring out. So I'm kind of happy about it. Anyways. All right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. Got a little more painting to do in this office. Got to take the desk apart, pull it away from the wall, and then paint this side of the room and finish this side where I didn't finish yesterday. So it'll look different on Monday when we have our Monday videos. So hope everyone has a fantastical weekend, and I shall talk to you guys next time. Adios.